I was thinking this is the best moment in history for Bitcoin, because the chairman of the Federal Reserve is speaking in front of Congress saying that he has this belief in Bitcoin. And obviously, as the Bitcoin price went up, that was a fantastic opportunity for Can, and I think they generated a 300 or 400% return in just a couple of weeks. And the only market risk I really see on the horizon is the potential of inflation creeping in, and the risk that plays is actually for people that are holding cash and not those that are invested. Zoom's looking quite expensive. So 100 billion market cap, it generates $2.5 billion revenue. And I prefer to be invested in stocks that are going with the wind rather than going against the wind.
What was going through your head when we saw tech stocks go down more than a week ago, and what were you doing at that time?
To be honest, I have a reasonably diversified portfolio, and I don't have a huge amount of exposure to US tech stocks. So my performance so far this year has been reasonably stable, and I haven't seen the volatility that a lot of other investors have. I definitely think that diversification will be more of a key benefit this year and going forwards than it has for a long time. There's really been a bull market in US tech stocks, both US the geography and tech as the sector. Whereas I think that there's huge opportunities because of that in almost everywhere else at the moment. I wasn't too concerned because I don't have exposure to it. I think a correction in some tech stocks would be justified. Some of them are looking a little expensive, like Zoom, for example. But overall, as a sector, it's clear that it has a solid 5 to 10 year coming up. Tech is just a fantastic sector in the fact that it has relatively low overheads, high gross margins, and the ability to scale across geographies without much incremental cost. So you have this like huge growth story in tech. So long-term tech stocks will do very well. But I would absolutely advise that people wouldn't necessarily just focus on one specific sector, be that tech or be that any other sector. And sectorial and geographical diversification is like super important. And it doesn't have to harm your upside potential, but it absolutely will limit your downside risk.
Makes sense. Especially if the companies that are balancing it out is totally unrelated to that company, and from a geographical standpoint, you hit it in the head that it reduces your risks as well. So you weren't tempted a bit to get into the ones that massively dropped? Also, no temptation to add those things?
In some cases, even after the drop, some tech stocks weren't looking cheap, and others were looking cheap before the recent volatility. So eBay was something that I picked up during that time a couple of weeks ago, because it seems to be an opportune entry point.
Do you have like a threshold that say it really doesn't go down after X amount of time? How long are you willing to wait also? As you all know, free short charges are also part of it as well. Do you have like a duration? I'll just wait up until this length of time.
The majority of my portfolio is always long, and I hold just a couple of short positions. Zoom is one of those currently. Zoom for me is just a fantastic hedge against the portfolio. So for me, Zoom represents a stock that's at the very highest level of optimism for the future and at the very top end of its perceived valuation. So I think if there's going to be any jitters in the market or any market pullback, I think Zoom is going to do disproportionately badly relative to the other stocks that I'm holding in my portfolio. So as a standalone holding, it's not necessarily important that it makes profit, but as a hedge to the overall portfolio, it's a fantastic hedge, because I think that the rest of the portfolio will hold up better in a downturn than Zoom would. So it's kind of a diversification play rather than a pure play into the lack of belief in Zoom.
That's a very, very smart way to to put it. No one thinks like that. Not a lot of people would think like you. So before I go to my next questions, guys, if you want to leverage on James' skill, why not just copy him so that you get to, I think it will be easier also for you, unless you really want to study all of the things that I'm doing. And he didn't tell you to copy him. It's me saying that that's a very, very good strategy that a lot of people are not talking about or using in their portfolios as well. I'm curious on this. There's a lot of talk about NFTs right now. I want to know your sense into that particular space. And also, I'm curious, most of your holdings are primarily equities. Why is there no cryptocurrency asset into the mix?
NFT is a really interesting space. I think if I was an artist, it would definitely be something that would be pricking my ears at. I think with something like that, though, it requires time to prove out that it holds value and that this is a rational way to do commerce. I'm super open-minded to it, though. I love the progression. I love technology as a whole. I love the fact that it brings in new entrants to the market and gets people excited. But it's definitely a riskier end of the spectrum, and I would say cryptos are too. I'm also a big fan of cryptos. The reason I don't hold them in the portfolio, though, is not because of my lack of belief necessarily in cryptos or the principle or the technology. It's more to the point that I can't get to high enough conviction to make a trade in them. I couldn't confidently explain to you why the price of Bitcoin would go up or down at any moment in time without a large constituent of what I'm creating conviction on being guess or feeling. And emotions tend to be counterproductive when building a portfolio. But I remember in 2013 when Ben Bernanke, who was the head of the Federal Reserve at the time, he stood in front of Congress and said that he thought that Bitcoin was fantastic, it's likely to be the future, and that the US shouldn't regulate it. And I remember at the time thinking it was $120 or $100 or whatever. I was thinking this is the best moment in history for Bitcoin, because the chairman of the Federal Reserve is speaking in front of Congress saying that he has this belief in Bitcoin. And it was 3 years until the price crossed $1,000, and now today it's
crazy.
Upwards of 50,000. So so the reason that pure crypto isn't in the portfolio is because I struggle to come to full conviction on making a trade there. But I do have some exposure. Recently, I purchased a stock called CAN. They manufacture crypto mining chips and AI chips. So it's a fantastic position where you've got a company that's generating cash flow. They can generate AI chips when the crypto price is suppressed. And then when crypto passes a certain point, or specifically Bitcoin, mining becomes incredibly profitable. And so there's a large demand for crypto miners. So CAN as a company switches from making AI chips to making Bitcoin mining rigs. And obviously, as the Bitcoin price went up, that was a fantastic opportunity for CAN. And I think they generated a 300 or 400% return in just a couple of weeks. They sold 100 and something thousand mining rigs. And so time and again, I have exposure to the crypto space, but never directly.
I think the first part of 2020, we saw US markets hit all-time highs. Then we saw it crash March 2020. Then it rallied massively. Then there were some bits of corrections and consolidations, but not really large enough. But from where we are right now, what's your sense? No, Biden is in. There's a bigger thrust towards renewables, at least in the US side of things. What do you think will be the legs for the market to continually push higher, at least just for this year as well?
I'm incredibly bullish for this year, 2021. I think there's just so many tailwinds in the market at the moment. We've got fantastic monetary policy, fantastic fiscal stimulus in the US particularly, but a lot of central banks are going down the same route. We have obviously vaccines. There's maybe 3 major vaccines that have been distributed on a large scale. There's like another 38 that are in development. So vaccinations are unlikely to become a blocker. So you have all these tailwinds. You have pent-up consumer demand. So it's likely that for a few years to come, markets will do incredibly well. My outlook for this year is incredibly bullish, and for the coming 5 years. But what is crucially important, and has never been more important than at the moment, is to have diversification in the portfolio, and not just to be focused on US tech stocks, but to look at other markets, because there really are some fantastic opportunities in other markets at the moment. And as long as you have a long-term time horizon, there's no better time to be invested than today. And the only market risk I really see on the horizon is the potential of inflation creeping in. And the risk that plays is actually for people that are holding cash and not those that are invested. So there's a risk. We haven't really felt inflation for 10 years. There's a risk that cash might be worth less over time. So yeah, absolutely. I think we have had a great run over 2020, but that's very much likely to continue through 2021 and for the coming 5 years. And with a well-diversified long-term portfolio, investors are set up to do incredibly well.
You mentioned two things as part of your answer. You mentioned diversification and then long-term. At least from your context, those two words have been used over and over by so many people. What's long-term? What's an acceptable long-term time horizon for you that when people position, they hold at assuming nothing fundamentally changes in the company, they can stay long on that position? And then what's a good number of stocks, or I don't know how you want to put it, number of stocks or percentage of allocation per stock per portfolio? From
the diversification perspective, a friend of mine actually asked this question the other day. He said that I've just opened a trading account, want to build a portfolio. Can you help me? We were chatting over WhatsApp, so you don't want to write too much. So I had to make it as simple as possible. And I told him, I said, Google the sectors that are in the S&P 500, and then pick what you believe will be the best performing stock in each of those sectors. And so then you end up with a diversified portfolio from a sectorial point of view, and 11 holdings, which is fantastic diversification to get started. I actually think geographic diversification is particularly important at the moment as well. But from a simple term, that's quite a good thought process to go through. And then in terms of time horizon, so I think on eToro, my average holding is about a month and a half, but that's actually artificially low. That might be a buy and a sell, or I might be rebalancing the portfolio. If I have high conviction in a good company, I'll be holding 3 or 4 years ideally. 2020 has been a bit of a unique year because the world's been flipped on its head. So you might see a few more changes than usual. But in a normal environment for the coming 5 years, some of the positions I'll hold for 3 to 5 years. And patience is often overlooked. Patience is the easiest way to get an edge on the market. Arguably, Warren Buffett's best strategy has been his patience, and that's made him the wealthiest man on earth. So patience is a fantastically overlooked, very simple, but very difficult to execute strategy that I'd highly recommend.
And patience, in my opinion, also goes both ways, meaning it's not just patience when you are positioned, holding on to it. It's also patience that you don't have to buy every time you have cash. You can also wait it out also until the parameters or whatever rules you have make sense also for you.
Absolutely.
If I'm a person who is entering eToro right now, or I'm a person who wants to copy, what can they expect from you when they start copying your portfolio?
I manage portfolio as if it is my portfolio. So it was private for the first 5 years while I built up a track record to give the confidence that when I opened it up for copiers, that they can see 5 years of track record. And I continue to this day to manage it as my portfolio. And I'm really keen to share and offer the support and access and information that I share with my clients who wealthy people that get access to information just by default, as it were. And I'm really keen and passionate about making that available to everyone. And I think eToro is really a fantastic platform for that. Anyone can log on and see what stocks I'm holding, or any of the popular investors for that matter, and get ideas. And if they feel comfortable, they can copy those trades if it matches their risk profile, or they can build a basket of popular investors, maximize the money that they earn.
I want to ask this because a lot of people look at successful people, but I always tell people, don't look at them when they're successful. Look at them when they were starting out and they were building that success. The reason why I asked that is this: was there a time also when you were investing, trading, that you also made a mistake, and then what happened there and what did you learn from it?
Many mistakes. I think part of the journey, to be honest, I think to build skills, I think it's really important to make mistakes. And what's even more important is to realize that they were mistakes. It's really easy to assume that the successes were good skill and the losses were bad luck. But it's really important to understand when it was actually a mistake. And I would say that the two biggest mistakes come from patience and emotion. I would say that the biggest mistakes by far have been not holding on to stocks and not remaining invested for long enough. Selling too early is a tragedy, because you've done all of the work to get to the conviction, and then you've only seen part of the reward. If
there are 3 things or 4 things or 5 things that for people who are watching this and they also want to at least try it on their own, what do you think people should study? It could be any fundamental parameter, it could be macroeconomic principles, or it could be technical analysis. For people who want to narrow down what they could start on, this is what I will look at when I'm analyzing a company, what would you want to impart to them?
Diversification portfolio construction is the most important, because that gives you the greatest room for error, maximizes return whilst minimizing risk, and gives you a little room for error. So I quite like the walkthrough of going through the S&P and picking the best, what you believe will be the best performing stock in each sector. And then when you're looking at that stock, just look at how stable have the earnings been before, how much debt does that company have, and from a starting point, that's absolutely the best place to start, because at the end of the day, you want to be holding shares in companies that are making lots of money, and that's what essentially drives stock prices long term. So yeah, I would say look at a diversified range, how much they're earning and how much debt the company holds.
Thank you so much, James. To everyone who wants to copy James, I'll put the link in the description below that goes straight to his profile, so you get to see his track record, his current position, and I'm sure that if you follow him, you can easily converse with him as well via the eToro platform. So thank you so much for your time, James. It was really fun hearing your thoughts and insights on the market. So to everyone, I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless.
Thank you, Marvin. It's been a pleasure.